What if I told you, the next financial crisis has already started, but this time, there are no loud alarms. No breaking news. No people running out of banks. Everything looks normal. People are still shopping. Stock markets still look strong. Governments keep saying the economy is stable. But behind the scenes, something dangerous is building up. Debt is exploding. Jobs are disappearing quietly. Prices are still hurting families. And millions of people are surviving on credit cards just to pay bills. History shows us one scary truth: every major financial collapse looked fine right before it happened. In 2008, people didn't see it coming. In 2020, the world changed overnight. And now in 2026, experts believe another massive economic shift may already be underway. So the big question is, are we already inside the next financial crisis, without realizing it? Today, we'll uncover the warning signs nobody is talking about, how the rich are preparing quietly, and most importantly, what you can do before it's too late. Stay till the end, because one of these signs may already be affecting your life right now. Welcome back to Wealth Flow *, the channel where we uncover the hidden truths about money, wealth, the economy, and the future of finance. If you want to stay ahead while others stay confused, make sure to subscribe and turn on the bell icon, because the next few years could change people's financial lives forever. Now let's begin. Downward Trend Part 1. Why everything feels wrong. Have you noticed something strange lately? Even people with decent salaries are struggling. Groceries cost more. Rent is higher. Electricity bills keep rising. But salaries? Almost the same. And yet, governments keep saying inflation is under control. So why do people still feel financially stressed? Because the real problem isn't just inflation anymore. It's something deeper. The system itself is slowing down. Businesses are hiring less. Companies are quietly laying off workers. Young people are finding it harder to buy homes. And middle-class families are drowning in debt. This is exactly how financial crises begin. Not with one giant explosion, but with small cracks that slowly spread everywhere. Credit card Part 2. The debt trap is getting worse right now. Millions of people around the world are surviving using debt. Credit cards. Personal loans. Buy now, pay later apps. People are borrowing money just to survive normal life. That is extremely dangerous. Because debt feels harmless at first. But once interest rates rise, everything changes. Imagine this. A family already struggling with expenses suddenly has higher loan payments. Now they cut spending. Businesses earn less money. Companies start layoffs. More people lose jobs. More loans go unpaid. And suddenly, a financial chain reaction begins. This happened before in 2008. Back then, people thought housing prices would rise forever. Banks kept giving risky loans. Everything looked normal, until the entire system collapsed. Today, many experts fear we may be repeating similar mistakes, just in different forms. Bank Part 3. Banks are quietly under pressure. Most people think banks are always safe. But here's the reality: banks only work when people trust them. If too many people panic and withdraw money at once, even large banks can collapse. And recently, we've already seen warning signs. Some banks around the world have failed. Others needed emergency support. But mainstream headlines moved on quickly. Why? Because governments and financial institutions don't want public panic. Fear spreads faster than facts. So instead of dramatic warnings, problems are hidden quietly behind temporary solutions, but the risks never truly disappear. And here's the scary part: modern banking is more connected than ever before. If one major system fails, the impact can spread globally within hours. #Globe Part 4. The global economy is more fragile than people think. The world economy today is deeply connected. 1 war. 1 supply chain issue. 1 energy crisis. 1 banking failure. And suddenly prices rise everywhere. That's exactly what we've seen in recent years. Oil prices became unstable. Shipping costs increased. Food prices jumped globally. And ordinary people paid the price. Many countries are now carrying massive debt levels. Governments printed enormous amounts of money during crises. At first, it seemed helpful. But printing money endlessly creates another problem: currency loses value over time. And when money loses value, everything becomes more expensive. That's why many people today feel poorer even while working harder. #Robot Part 5. AI and automation are quietly replacing jobs. There's another major issue nobody talks about enough: artificial intelligence. AI is improving faster than most people expected. Companies love automation because machines don't ask for salaries, vacations, or bonuses. That means millions of jobs may slowly disappear over the next decade. Not overnight, but gradually. Customer service, office work, basic design, data entry, even some programming jobs. The scary thing is, many people still think their jobs are completely safe. But history shows technology always changes economies. The Industrial Revolution replaced workers. Computers replaced old industries. And now AI may transform the workforce again. This creates uncertainty. And uncertainty creates financial fear. #Upward Trend Part 6. Why stock markets still look strong now? You might ask, if a crisis is starting, why are stock markets still rising sometimes? Good question. Because markets don't always reflect reality immediately. Sometimes markets rise because of hype. Sometimes because investors believe central banks will save the economy. But underneath the surface, many companies are struggling. Consumer spending is weakening. Small businesses are under pressure. And layoffs continue quietly. Markets can stay optimistic for a while, until reality catches up. And when confidence disappears, everything can fall very quickly. That's what makes financial crises dangerous. Most people react too late. #Coin Part 7. Why the rich are preparing quietly during uncertain times. Wealthy people usually move differently. They prepare early. Many rich investors are buying assets that hold value during crises. Gold, land, strong businesses, cash flow investments. Why? Because they understand one important rule: in times of chaos, assets matter more than paper money. That's also why central banks around the world have been increasing gold reserves in recent years. Gold has survived every major financial crisis in history. Empires collapsed. Currencies failed. Markets crashed. But gold continued holding value. This doesn't mean the world is ending, but it shows smart money is preparing for uncertainty. Warning Part 8. The middle class is in the biggest danger. The rich usually survive crises. The poor often receive government support. But the middle class? They get squeezed from both sides. Higher costs. Higher taxes. More debt. Less savings. That's why many middle-class families today feel trapped. They work hard, yet move nowhere financially. And this frustration is growing globally. People are realizing that traditional financial advice may no longer work the same way. Go to school, get a job, save money. For many people, that formula no longer guarantees security. That's why financial education today is more important than ever. Brain Part 9. What smart people are doing right now, so what should ordinary people do? First, don't panic. Financial crises create danger, but they also create opportunity. Smart people focus on preparation. Here are a few things many financially aware people are doing right now. 1. Reducing unnecessary debt. The less debt you carry, the safer you are during uncertainty. 2. Building emergency savings. Even a few months of savings can protect you during hard times. 3. Learning high-income skills. I may replace some jobs, but valuable skills will always matter. 4. Investing carefully. Not blindly following hype, but understanding long-term value. 5. Staying informed. Most people ignore economic changes until it's too late. Awareness itself is power. Fire Part 10. The biggest mistake people make. The biggest mistake during financial uncertainty is pretending nothing is happening. Many people ignore warning signs because uncomfortable truths feel scary. But ignoring reality never stops reality. In every crisis, some people lose everything, and others quietly become stronger. The difference is preparation. Remember, financial crises don't usually destroy everyone equally. Prepared people often survive much better than emotional people. That's why understanding money today is no longer optional. It's survival. Downward Trend Part 11. Are we already in the crisis? So, has the next financial crisis already started? Maybe not officially, but many warning signs are already here. Rising debt. Weakening purchasing power. Global instability. Job uncertainty. Banking pressure. Expensive living costs. The cracks are visible. The question is not whether change is coming. The real question is, who will be ready when it arrives? Because history always repeats one painful lesson. Most people notice the crisis only after it becomes impossible to ignore. The next financial crisis may not look like the last one. It may happen slowly, quietly, and digitally. But the people who prepare early could protect themselves while others panic. So don't ignore what's happening around you. Learn about money. Build valuable skills. Protect your future. Because in the coming years, financial knowledge may become one of the most powerful assets anyone can have. If you enjoyed this video, make sure to like, subscribe, and share this with someone who needs to hear it. And comment below. Do you think the next financial crisis has already started, or are people overreacting? Thanks for watching Wealth Flow, and we'll see you in the next video. Disclaimer. This video is created for educational and informational purposes only. The content shared in this video is based on publicly available information, market trends, personal opinions, and financial discussions. It should not be considered financial, investment, legal, or professional advice. Investing and financial decisions involve risk, and viewers should always do their own research and consult with a qualified financial advisor before making any financial decisions. The channel Wealth Flow is not responsible for any financial losses or actions taken based on this content. All opinions expressed are intended for awareness, discussion, and educational entertainment only.